name is Jessica Ballard, and today our host, Lauren Prosser, will be discussing how to identify opportunities to sell more accounting services to your existing client base. First, I'm going to run through a few housekeeping items before we get started. During today's webinar, you will be in listen-only mode, so no need to worry about any background noise on your end. You should have received a link to the GoToWebinar panel on your screen where you can access a PDF download of today's slides. I encourage you to ask questions throughout the presentation, and we will do our best to answer many of those questions as time permits at the conclusion of the presentation. To ask questions, please utilize the GoToWebinar panel on your screen where you may type in those questions. We will have a couple of live interactive polls throughout the presentation, which we invite you each to participate in. This can be done by clicking on your respective selection when the poll question is shown. Next, I'd like to introduce StageWorks. StageWorks is a financial information company that develops financial analysis solutions. Our data and applications are used by thousands of accounting firms and well over 600 financial institutions across North America. On your screen, you can see a couple of our awards. We were named the Inc. 500 list of fastest growing privately held companies in the U.S. We were also named to Deloitte's Technology Fast 500. Next, I would like to introduce our speaker. Lauren Prosser is the Director of ProfitCents Professional Services. Within PPS, Lauren's specific expertise at an organizational level is in working with mid-market and large public accounting firms to develop and retain talented accounting professionals, construct and optimize client service plans, facilitate strategic planning, and to form, implement, and execute business development and growth strategies. All right, Lauren, I'm going to go ahead and turn it over to you to begin.
Great, thank you, Jessica. And I just want to reiterate what Jessica said, how much we appreciate everyone joining us for today's session. We very much appreciate your time and hope that you'll find this content valuable and also actionable within your own accounting practices. As Jessica said, we encourage you to ask or submit questions during the session today, and we will answer as many of those as possible or as time permits at the end of the session. We also encourage you, as Jessica said, to participate in the polling questions, which will occur a little later on in our session today, to make this as interactive as possible and really to get a better sense to the audience that we have with us today. With that being said, without any further ado, let's go ahead and jump in. In terms of the content or outline for our session today, we're going to start off with a little bit of background, kind of framing what we'll ultimately be focusing on. We're going to start off with a discussion of certain client-centric MAP KPIs. So I have two acronyms there. MAP meaning Management of an Accounting Practice, and KPI meaning Key Performance Indicator. So we're going to look at certain metrics that I would strongly encourage your firm to track to really help you assess where you're capturing opportunities, where opportunities may be left on the table within your client base, and where within your client base you're truly the best fit, where your firm's specific expertise, resources, etc., really is best aligned with the needs of a particular group of clients. So we're going to start off looking at a handful of relevant MAP KPIs, and from there we're going to expand the discussion and talk about profiling your existing client base for opportunities, essentially. Looking at where you're retaining clients and why that is, and how we can translate what we're doing well with a certain group of clients into certain actionable items with a larger group of our clients. We're also, though, going to talk about, or kind of the theme of our session today is not just going to be growth, getting larger, generating more revenue, but specifically growth or expansion through refinement. And I'll clarify what I mean by that in just a moment. But we'll talk about profiling your client base, what to look for within your existing client base in order to identify and then ultimately capture opportunities for expanding your reach. We'll talk about, once we've identified clients where there is an opportunity to do more with them, how to go about gaining from those clients a working definition of how they measure value. What's important to them, what kind of insights and information is needed by that group of clients, how would they measure value, what are they willing to pay for, etc. And then how do we translate that into a more targeted client service strategy as a firm or as a professional within public accounting. So that will be the final part of our session, is bringing together everything that we've discussed in the first three parts. So to go back to what I said just a moment ago, the overriding theme or kind of overarching theme today being expansion or growth through refinement. So growth itself is a result of a successful marriage or union between the execution of strategy and the reception of that strategy by your firm's intended audience. Strategy is essentially your firm's playbook, a playbook that culminates from the insights gained through access to timely information and through an understanding of your firm's core strengths. Your firm's strategy, and we're really thinking about client service strategy, your firm's strategy must address 4 things, or at its core it must address 4 things. It must address the who. Who is your target audience? Who is the delivery team working with that target audience, etc.? What? What is the scope of the services that you'll be providing to that target audience? How? What is your platform for delivery, the medium of your message, etc.? And why? Who are we serving and to what end? What is the scope of the value and the alignment with our firm's strategy and target audience needs? Today we're going to be focusing on a few of those items, and we're going to be starting with the who. How do we identify who we have an opportunity to expand our reach within? Which existing clients can we be doing more with? And so focusing on that who question and looking strictly at organic growth as opposed to growth resulting from M&A activity amongst accounting firms. One of the most successful growth strategies as well as differentiation strategies for public accounting firms during the past several years has been driven by a greater degree of service specialization, as well as I would say also an industry niche growth-driven strategy. Today we're going to talk about a little bit of both, more so focused around the service specialization. Okay? So we're going to talk about not only how to identify who we can be doing more with, but how to better allocate our resources within the firm so that we're not spreading ourselves too thin. And we'll talk about, as a result of these gained insights, how to really tailor your business development efforts in a way that will lay a foundation for more deliberate and intentional growth, one which successfully communicates your firm's points of differentiation around your ability to go beyond the delivery of information to really the delivery of ideas and solutions to your client. Now, as an accountant, some of your core skill sets and strengths, your professional skill sets, comes from your ability to aggregate and analyze data and take away from that analysis a better understanding of X, Y, and Z. Yet what I see in many of the firms that I work with, and this is true regardless of where the firm's located, how large the firm is, what their existing specializations are or are not, what I see is although accountants have a very precise and specific skill set centered around their ability to aggregate and analyze and organize data, so often they don't translate that into an analysis, an aggregation, an organization of data about their own clients. And as a firm or as a professional in public accounting, your competitive advantage, and this is true if you're a sole practitioner or if you are a part of a top 100 firm, your firm's competitive advantage comes from your ability to mine the vast amount of data that exists about your clients, that vast amount of data at your disposal, and translate that data into actionable insights on a regular or ongoing basis. You need to, on an iterative basis, on a continuous basis, be mining information from within your client base to figure out, again, how to better allocate resources, how to narrow your focus, how to expand your reach, etc. And really the goal of all of this is to break down those boundaries or barriers and close those perception gaps between what it is that you focus on and what you're offering to your clients and what they care about, what they need, and how they measure the value that you provide. Okay. So let's start off looking at some of those key MAP KPIs. Now, many of the firms, or I would say almost the majority of the firms that I work with, when I go to work with a firm to assist them with client service strategy construction, they don't currently have a way to aggregate and analyze all of the information we're going to be talking about today that you should be pulling from your client base. So the most important thing that you can walk away from today's session with is an understanding of, a better understanding of what it is that you should be looking for within your client base, how frequently you should be doing that, and what you should be doing with that information. Again, the first part here when we're looking at some of these KPIs is to provide context or background. One thing that you should be tracking on an ongoing basis is the average number of services you're providing per client. And depending on how large your firm is, the exact number of services per client is something that you should be looking at as well. 25 to 40%, I'm sure many of you have seen this metric, of new business, new revenues on an annual basis that top accounting firms generate come from additional work, new engagements with existing clients. When you think about the fact that on average, most public accounting firms are growing between 3 and 5% a year, this is a really significant metric here, average number of services per client. It is a lot less costly to introduce a new service with an existing client than to win a new client entirely. So you want to look at the average number of services per client and compare that alongside of retention rates. And this is kind of a blocking and tackling drill almost. I mean, this is a fairly basic one, but it should go without saying that as your firm is more closely entwined with a client, it becomes more attuned with their needs and can address a greater spectrum of their needs. That should tie into your retention rate over time increasing exponentially. Where you are most vulnerable is where you're only providing one service to a client. Makes it a lot easier for them to leave. The cost of leaving is much lower for them. And what we see is with firms who are, on average, providing 2 or fewer services to clients, there is a lack of awareness. It's not necessarily that they don't provide the services that the client is looking for or that the client needs. Quite the opposite, actually. So the clients are not aware of the services that the firm offers. This metric here coming from a publication from the Hinge Research Institute titled How Buyers Buy Accounting and Financial Services. And of the group or audience that it polled, in green there being the buyers of accounting and financial services, only a third, felt like they were fully aware of all of the services that their accounting firm had to offer. So 2/3 of clients, and that number will be a little different for each of your firms, but regardless, it's probably a significant percentage of your clients aren't aware of everything it is that you have to offer in the way of, let's not say services, let's say solutions. Even if they are aware of the majority of those services or solutions, they might not understand the specific value that it can offer to their organization. And that's something we'll touch on in a moment. Another metric here, client retention rate. Again, kind of a basic fundamental. Looking at average attrition rate, and we'll talk in a moment about further filtering this by industry, size company, et cetera. Looking at service cycles, that's going to differ for certain types of engagements like audit engagements, as well as certain industries like nonprofits, where you might see 3 to 4 years on average, those organizations changing auditors. What I want to do here, though, is ask of the audience here, I'm going to go ahead and launch our first poll. And what I want to do is ask, does your firm have a formal client service plan in place? Okay. So I'm going to go ahead and launch that poll. Give everyone a few seconds to respond there. Okay. And then we'll close that poll in just a moment. Looks like we have 3/4 of folks have responded. Wait until it gets a little bit closer to 100%. Okay. All right, at this point, I'm going to go ahead and close the poll. We have 84% of folks on today's session having responded, and share the results. Okay. So 16% of those polled, or those who responded today, said that yes, they do have a formal client service plan in place. 84% indicated no, they do not. So for those who don't have a formal client service plan in place, a good starting point would be to gather some of this information amongst your client base. And I'd say that the response here holds pretty consistent with different surveys or polls that we've done in the past. You want to remember that each firm, your firm can't be everything to every client or potential client. So it's important to know which service offerings are most successful and how that ties into where you're keeping clients. And you want to look at the retention rate, among other things that we'll talk about in a moment, at 1, 3, 5, and 10-year intervals. And we're going to ultimately talk about using this information to identify patterns that can help you keep clients. What we're looking at here comes from CPA trend lines from a survey that they published a few years back. And they were asking, basically looking for differences in terms of perception. First, they polled a group of business owners and said, why would your organization change CPA firms? Okay. I've circled some of the key responses here: poor client service or attentiveness, need for additional or new services, and lack of proactivity. On this following slide here, what we're going to see is that they asked the same questions to accounting firms and said, why would you lose clients? Where are you losing clients? Okay. In brackets there off to the left, I've put the responses from the business owners that we saw on the previous slide. And you'll see that there's a pretty big perception gap there. So really looking for proactivity and service offerings specific to your client's needs. The strongest impression that your client will have of your firm comes from the questions that you ask them and the actions that you'll then take. And in a few minutes, we'll talk about some specific questions to ask your clients to identify additional opportunities. Another key metric to be looking at here is the average number of top clients, so your A client or your level 1 clients, top client touches per month. Clients value face time. 70 to 80% of the value your clients report getting comes from the time that they spend with you face-to-face, sitting down, talking about what's going on in their business, successes, challenges, etc. Yet only 10 to 15% of the time that you spend working on client engagements, client work, etc., is visible or is in front of your clients. So we want to look at closing that gap as well. We want to make sure that our most important clients are constantly being contacted and that we're looking to identify as many different avenues or through as many different avenues as possible how to better serve their needs. This ties in here looking at frequency of contact. The average here among clients that responded to the CCH survey, average number of times they met with their CPA firm in the last year for business clients was 5.4 times. What if we could see our clients even one more time during the year? Strategically, during a specific point in the year when we don't have as much contact with them, what might we learn at the end of the second quarter or mid-year, etc. Lifetime value of the client, up to 95% of your firm's profits, and this is on average, but up to 95% of an accounting firm's profits comes from its long-term clients. So significantly high percentage, but it makes sense. The clients that you keep the longest are probably the clients that you're doing the most with. They have the greatest reach within their organization. And the cost of acquiring those clients is none, since they're existing clients. You have economies of scale since you've worked with them over time, and you have processes that you can replicate. The three primary components, and for those of you who are interested in coming up with a specific formula to calculate the lifetime value of clients within your firm, you can certainly reach out to me afterwards. But basically three things, looking at the client's value over time. So average annual fees per client plus cross-selling opportunities, the duration of service, how long you've worked with the client, and a discounting factor. And the discounting factor is what would be specific to your firm, again, that we can help you work with or come up with a specific factor to incorporate there. Last few ones here, number of cross-selling opportunities identified versus one. Taking a more specialized approach within your client service strategy is a great normalizer between firms of different size. What I want to do here is go ahead and open the second poll. And the second poll is asking, does your firm track cross-selling opportunities identified versus those one? This should be something incorporated into your monthly pipeline or biweekly pipeline or marketing review or meetings. So coming up with specific lists of clients where you feel like there are additional opportunities, discussing your approach to positioning those opportunities or those additional offerings or solutions to the clients, and how successful you've been in actually capturing those. I'm going to go ahead and close the poll here. 88% of those in response today indicated that their firm does not have a specific or means in place for tracking cross-selling opportunities identified versus those one. And that ties in against the client service plan. Really one with a foresight to identify opportunities, pair those client opportunities and needs with your firm's resources and expertise, and then focus on driving value through relationships and not just deliverables. So here we want to think about which clients are underserved and what systems in place and incentives in place do you have to facilitate opportunity identification within your firm. All right, from here let's go ahead and last few slides here in our background before we jump into actually profiling your client base. I incorporated this because I think it's very telling here. This coming from CPA Trendlines again in 2012. They issued a study or survey looking at marketing plans of top firms. And in orange here at the top, I've highlighted what those top firms are doing differently than low or underperforming firms. And top firms, that's being measured by new revenues generated, organic growth year over year, retention of employees, and retention of clients. So they're professionalizing their business development initiatives and leadership functions. They are looking at specific industry verticals and service specialization, and they're doing more in the way of targeting. Many of you, I'm sure, have read the book by Jim Collins, Good to Great, and he said something that really stuck with me there that ties in, I think, to this slide. Managing your problems can only make you good, whereas building your opportunities is the only way to become great. So ultimately here again, by narrowing our focus, we can increase our relevance and expand our capabilities. That should tie into boosting profitability, refining skill sets in the firm, better allocating and concentrating your time, and developing processes that can be replicated. Accounting Today, in their 2013 list of top 100 firms, the publication that was put together, this looks at the percentage of those top 100 firms increasing their business within different types of clients. Top 100 firms, so many of those top 100 firms are built off of, small to mid-sized local and regional firms. So even if you're not a part of a top 100 firm, many of these services and kind of industry niches or industry areas are ones that can be translated into the services that you're providing, again, regardless of the size of your firm, in many, not necessarily all cases here. Looking at top client issues, a list of top 10 client issues, half of which, or a little over half of which, tie into, of the list I'm about to read to you, tie into or are closely related to core service offerings that an accounting firm is already providing and what should be core competencies. So top client issues, regulatory changes, IT systems and security. Those two require a fairly decent degree of specialization, as does employer HR-related considerations and risk management. So it's 4 of the top 10. Let's listen to the other 6 of the top 10 client issues. These are all much more directly linked or tied into what should be some existing competencies or strengths within your firm. Management of cash flow, helping your client with their operating cycle, for example. Cost control measures and profitability. How do we control costs to boost profitability? Succession planning. What changes can they make to increase or impact the value of their company, among other things? Financing considerations, leverage, debt, etc. M&A activity, and expansion. Okay? So those are all, or all have components of things that are tied into core competencies of an accounting firm. It's not that far of a reach. The services that you can provide that are going to be most profitable beyond what you're already doing are those most closely related to what you're already doing. So think close to home. Okay? In the book Leading Firms by David Coleman, he talks about 3 elements of strategy. One of those is a client service model that keeps the firm doing the right things in the right ways for the right clients. Okay? And that comes from knowing where your firm is best equipped to compete and having a clear and accurate definition of your client's value proposition. So let's figure out how to profile your client base. And I'd say this is probably the most important portion of today's session. Okay, so when we're looking at our ideal client or where we can expand our reach within our client base, and the thought here is that our ideal client already exists within our client base, or should exist within our client base. So what we're looking at here is first segmenting clients. I'm going to list several ways you can segment your clients. If you don't already have a client service strategy in place or you don't already track some of those KPIs we looked at, this is your starting point. If you take one actionable item from our session today, it's that you should be segmenting your clients by at least some of the following. I'm going to list the most important ones first, and then I'll list several other ways you can segment clients. You should segment clients by industry. You should segment clients by the type of service they're receiving. You should segment clients by realization rates, segment clients by retention rates. Also segment clients by where you've seen the greatest growth in terms of additional services offered year over year or however frequently you're tracking this. Other things that you can track would include clients where their services that you're providing are more of an annuity versus a one-time service, gross and net fees. And by the way, anyone who's interested in this list can email me after the fact and I can send that to them. But gross and net fees, size in terms of how large as measured by annual revenue the company is, how they became a client, was it a word-of-mouth referral, was it related to a direct marketing initiative, their location, so I think geographic location, fee structure, hourly, flat fee, etc., and the stage in their business's life cycle. That one is actually, I'd say, one of the more critical ones that I left off of the top there. Again, the more critical ones being the services you're providing, industries, realization rates, retention rates, okay, and growth, where you've seen the most expansion. So where is your firm keeping clients? As you're looking, by the way, at industries where you're serving clients, I would say if you have access to industry data or information, take your top 3 or top 5 industries where you have the largest concentration of clients and look at what's changed over time in the industry and how is that maybe tied into what your firm's good at, the services you provide, et cetera. How has your approach evolved with those clients? And look at what's going on in the industry. Think about the industries where you have a strong presence. If there are industries with cash to spend, like some professional service organizations perhaps, think about services that would be related or that would tie into what's going on in the industry. Think value enhancement strategies, transition planning, expansion strategy. For high growth industries where you have a large concentration of clients, that might translate into different service offerings, like helping with internal control design, review of risk management, resource allocation, capacity planning, cost control modeling, et cetera. So for the top X number of industries where you have a strong presence, think about what's going on in that industry, kind of take a step back, what's going on in the industry, and what type of services might be needed as a result of that. Thinking about clients that are underserved, and I think this is a pretty alarming percentage here. For businesses with an annual revenue of $10 million and more, so your clients who have an annual revenue of $10 million and more, 40% of those on average use multiple CPA firms. And the number one reason is not because of independence considerations, it's because of lack of awareness of services. So as you're profiling your client base, think about what types of conversations you've had with those clients. Look at the clients where you have a low average number of services, but they're in an industry where you have a lot of clients. Why haven't you been able to reach that client and expand your reach over the time that you've worked with them? Think about wallet share. What percentage of that client's budget for accounting services are you getting if they're working with multiple firms? According to a 2010 CCH survey, 55% of businesses report that the needs from their accounting firm are growing. So the opportunity is there. It's a matter of creating the awareness. And we create the awareness through what I refer to as the discovery process. And the discovery process ties into basically curiosity. Curiosity and asking better questions. So often when I go into work with an accounting firm, the problem or issue that I see at the center of why a firm isn't growing and expanding like they should is because they're so focused on providing from the get-go to the client solutions and answers that they lose sight of the fact that they first have to ask the right questions. For those of you who are within a firm I've worked with, you've probably heard me say this before. I overused this quote from Lou Holtz. But he said something very simple that I think is very powerful. What Lou Holtz says is, I never learn when I'm talking, I only learn when I ask questions. The discovery process is all about asking better questions. Once you've profiled your client base and you've looked at retention rates, it's really where your starting point should be. Where are you keeping clients the longest? And where do we see overlap or similarities? Maybe it's fee structure, maybe it's within industries or size company or how they became a client. But look to find as many points in common as possible amongst the clients that you're keeping the longest. And then look for newer clients that fit multiple points there and figure out what it is that you can do to expand your reach. Okay. The key to the discovery process is to ask more purposeful, targeted questions and then listen. And expect that what you hear from your client, or expect to be changed by what you hear from your client. In the book, The Trusted Advisor, actually the Trusted Advisor Field Book by David H. Maister, he talks about different fundamental attitudes, one of which is curiosity, and that's, I think, probably the most important. That's my favorite. And he says curiosity trumps knowing. He says if you're constantly curious about your clients, then you're always poised to learn, create connections, and have a positive influence. And he says that you actually have to prepare for curiosity. You have to give yourself an opportunity to notice. Your clients will admire professional curiosity. Again, that curiosity enabled by good planning. So what he says is pick a client and come up with a list of questions you wish you knew the answer to. I'm going to take a little bit of a broader approach and say, let's come up with a list of questions we can use as a starting point within a larger group of clients, and then we can tweak or refine those on an individual basis. But planning for curiosity leads you to wonder, he says, about other people, about your clients, and then acting on that curiosity allows you to engage with them. Again, curiosity being a fundamental activity. Clients want to be approached about additional services overwhelmingly in person, face-to-face. So the discovery process ties into that. All right, let me skip forward here. Okay, so the objective of the discovery process is, actually there are several objectives of the discovery process. The discovery process is really centered on giving you more timely information and insights and opening up or creating an opportunity for conversation with your client. It shifts the focus on value or need as opposed to a symptom. Okay? So it looks at the root or source of the problem or opportunity as opposed to kind of symptoms on the periphery. And it allows your client to define for you what they view as valuable, as opposed to you trying to make that assumption. Too often, I see firms getting comfortable with clients they've worked with over a long period of time. That client's business is probably not exactly where they want it to be. Personally, financially, they're probably not exactly where they'd like to be. There's always room for improvement. So you never want to be complacent. That opens up a window for other firms to get in and get in within your client base. Instead of guessing or assuming or trying to create a working definition on your own of what your client finds valuable, have your client spell that out for you. That's what we're going to talk about right now. And find out how they measure success. That translates or turns you into someone who provides information and general solutions, into someone who provides context and ideas and is tied in at a personal and organizational level. It also breaks down those barriers. Essentially, the discovery process involves you asking 2 or 3 questions, maybe more, but it can be as few as 2 or 3 questions, within those clients that you've identified that, hey, we're leaving something on the table. We know we could do more with these clients because we have X number or percentage of other clients in the same industry, receiving the same service or one of the same services, et cetera, that we're keeping or we have kept for this amount of time. Okay. So we're looking for essentially where there are holes, where we're overlooking opportunities, and those are the clients we're going to go to and initiate the discovery process. The good news for everyone today is that this is the ideal time of year to initiate this discovery process. I always tell my firms, forget when your client's fiscal year end is right now. Think about the calendar year, something that everyone is focused on. And think about your client's role within their organization. Okay. Are they a CFO, COO, CEO, et cetera, on the management committee? What are they accountable for in their organization? I guarantee that they are thinking about what their business has done year to date in the calendar year up to this point. And then they're focused on whatever goals, revenue goals, growth goals, expansion goals, et cetera, profitability goals that were set for the end of the year. That's what they're focused on between now and year end. So this is a perfect time to reach out to the client and have a discussion about or initiate this discovery process. Pre-busy season for you, it's going to then allow you, based on what you learned, to tailor your approach within busy season and create that level of awareness prior to the time of year when you have the most going on, but also see your clients the most. So I'm going to go through some of the questions you can ask to get your client to talk to you about how they see their business. In order to effectively communicate with your client, you have to understand how they see their business. Step into their shoes, not as their accountant, but as best possible as them, to see how they view their business. It's going to be different than how you view their business as their accountant. Okay. So their perception of their business, their perception of their competitive position, et cetera. Their perception of resources that they have available, their perception of timelines and decisions they need to make. The discovery process is also going to help you get a better working understanding of their level of financial sophistication, and probably most importantly, their needs, their goals, and their concerns, i.e., what they're focused on right now, what they care about, and from there it should be pretty easy to back solve and figure out what it is that you can offer in the way of solutions, insights, resources, et cetera. Something that is overlooked in many firms as they bring new folks on board, new firm members on board, and they're talking about or going through or training them on the different services that they offer. It's how to translate those services, the technical aspects, et cetera, into value, a value proposition to a client or prospective client. And that's something that everyone in your firm has to be able to do when they're out in the field, when they're at a conference, et cetera, is listen carefully, quickly get a working definition of what's valuable to that client or prospective client, and then pair that right away with firm solutions. So some of the questions that you could ask, and I'm happy to send anyone who's interested a list of these as well. Okay. You can start off with very basic, maybe for a newer client. What are your short-term financial goals now to year end? What about through 2014, through next year? Okay. Beyond that, how is your organization measuring success in the short term? So you always want to pair these questions with timelines. You want to make sure that you know what their, of course, organizational structure and decision-making process looks like. But you want to find out, about company culture and values. You want to make sure that you're asking about what differentiates their business from their competitors. What are your most important assets or resources in the organization? How are you leveraging those, and how could that be improved? What resources or markets are you competing for as a business or organization? And how are you, within your division, department, et cetera, currently leveraging technology? Make sure you know about their target audience, their centers of influence. Think about, as you're profiling your client base by industry, what related industries tie into those industries where you have a strong presence. What are your target growth goals? What strategies do you have to support those? What is your current approach to capacity planning? Do you know what your profitability and capital requirements, this is a big one, what are your profitability and capital requirements for those future scenarios, growth goals, et cetera? What are the most critical challenges or obstacles that you face, and again, give it a time frame, between now and year end, over the next year, et cetera? Okay. What is going on in your industry? And you want to have done some research on their industry ahead of time so you can offer some insight there, or contribute to that conversation. But what's going on in the industry, and how does that create certain opportunities or obstacles for you? So those are all kind of big picture related to strategy. You can ask more specific questions as well. Specific questions related to what are your fixed costs per month? How could you operate more effectively within that, et cetera. So the questions, again, in the discovery process should be ones that are very naturally occurring that you can work into a conversation with a client. Come up with a list of, even start with 5 clients where you feel like you're leaving something on the table. Give them a call and say, hey, we've been sitting down, the engagement team and I, or I've been sitting down and looking over, the financials we put together, or returns, tax returns we've put together for your organization over the past few years. And we've pulled some industry comparables. And we've seen some patterns, some kind of key takeaways, perhaps areas that we could help you better leverage, or things to really pay attention to, or that should be on the radar that we'd like to sit down and discuss with you. And we'd also like to ask a few key questions to help us better understand where you're going as an organization. What that tells that client is that we've thought critically and purposefully about your business. We want to make sure that we're on the same page in understanding what's important to you, what you're focused on. And then from there, it's very natural to follow up on that conversation, i.e. that discovery process where you're asking some of the questions we ran through to talk about related solutions. So it takes cross-selling from cross-selling to cross-serving. If you can show your client how you can save them money, make them run more effectively, et cetera, it's going to be a no-brainer that they're going to want to partner together and work with you to accomplish that. Again, I can send over a list of questions to anyone who's interested. But as you're talking to that individual or group of individuals from the business, you want to make sure that you're considering, when you pick the questions to ask them through the discovery process, what your existing relationship is with them. Again, you're gaining an understanding of their financial sophistication. Make sure you understand what they're held accountable for in the organization, how what they do ties into the business overall, whether or not they have a seat at the table for various types of decisions, including purchasing, accounting services. Are you talking to the right person? Think about what their network would be, or centers of influence. Clients you could potentially introduce to each other. And then find out what their, not just organizational focus is, but personal priorities are as well. At more of an organizational level, again, we want to make sure as we pick the questions to ask, we're thinking about culture and values, thinking about the stage in the business's life cycle, the structure, management, and organizational structure, the industry that they operate within. If you have access to industry information, an easy way to have something concrete, relevant, tangible, et cetera, for that meeting when you're initiating the discovery process, bring some data for other businesses comparable to theirs. This is what we see other full-service restaurants doing. let's talk about what your goals are over the next 12 months and how we could maybe leverage some of these industry best practices to help you get there. Bridge the gap from what you're doing to what your peers are doing. Or looking at the fact that you're outperforming your peers, these are some things you could take advantage of to really expand or grow. Okay. Looking at seasonal opportunities and challenges, and again, necessary or needed resources. Ultimately, what you're doing is kind of creating a map. By profiling your clients initially, segmenting revenues, etc., we're looking at where we're keeping clients and what it is that we're good at. From figuring out why or where you're keeping clients, you next need to figure out why. What is it about those clients that makes them a good fit for your firm? How do those clients help support where you're looking to go and grow as a firm? How do they tie into existing intellectual capital and resources that you have? How can you define or measure the potential that exists with other similar types of clients in your existing client base? Why haven't we been successful with expanding our reach to this point with those clients? Is it because we haven't had the right conversations or we're not talking to the right people? Have you trained members of your team in opportunity identification? I would say if you're in a firm that has multiple professionals, make a point to sit down or as a part of your biweekly or monthly pipeline meetings or reviews and highlight a specific service offering and talk about the value that it offers to a client. Come up with a case study. It can be informal, but something you discuss internally. That's going to help with communication of value to clients through this process going forward. Make sure that the clients that you're looking to focus on or the clients that you're seeing that you're retaining over time, going forward, there's an opportunity to continue expanding with to the extent that that can be predicted. Look at where their industry is going. As best possible, forecast what types of needs in terms of services might be tied into that. Make sure, again, that's aligned with what your firm's looking to do. Make sure that internally you have channels of communication and accountability related to identifying these service opportunities or cross-serving opportunities. I would say assign leaders to the different initiatives. Within your different existing service lines, have someone leading these cross-serving initiatives. Have them work with and mentor younger firm members. Anyone who's in front of a client, whether it's part of field work during an engagement or they're the individual in the firm who brought that client in, they should all be a part of this dialogue or discussion on an ongoing basis. So you want to clearly define what it is that you're looking to do by expanding your reach within your client base. Okay. Make sure that you have a working definition of which clients are the correct fit from that, what services are related, a budget, so if you're going to invest in business development, marketing, etc., that you know what you're able and willing to contribute to that initiative, what the return will be, and how long it will take to get a return on that investment. Again, so timelines, supporting resources, any additional staff that might be needed. Incentives. How are you going to incentivize existing firm members to identify these opportunities? How can you set them up to work together on cross-functional teams to identify opportunities? And how do you want to scale the rollout? I'd say pick a specific channel or focus within your firm's existing client base and start a scaled rollout as opposed to trying to launch this all at once. Pick a handful of metrics to start tracking. Go ahead and segment your clients or profile your clients, and then pick a handful of clients within that group that you've identified. Some questions and considerations. Again, this is part of the larger slide deck that is available. Is this consistent with our firm's larger goals and vision? Is there sufficient need or demand? What is the trajectory of the industries that we've identified or industries where we've had success retaining clients, and how will that shape future needs? What investments are required to expand our reach? When will those be returned? Why haven't we already expanded our reach with those clients? What's prevented us? Are there certain barriers to entry? And again, think close to home. Services closely related to what you're already providing. How do we reach these clients? What are their centers of influence? Do we have what it takes to support this? What services, again, how will we structure our fees or pricing? How profitable are we looking or anticipating those engagements to be? How are we going to track progress with this along the way? And from there, what related markets might we expand our reach into? And that gets more into not so much business development, but marketing. What other related industries, et cetera, might we introduce ourselves into if we really establish a core strength or competency with this group? Okay? And how will we structure, again, the delivery team? A client service map is ultimately what should ensue from all of this, where you have a list of things to look for within your client base, client scenarios. We know that we're really good with startup companies because we ultimately retain them over a long period of time, and we have, on average, 3.5 services provided per startup company that we work with. So we come up with a list of client scenarios, things to look for where we're keeping our clients. Then we come up with a list of existing resources that we have, whether it's, we currently or frequently use industry benchmarking and forecasting tools with startup companies. We then talk about focal points. From those resources, what is it that we're focusing on? What is it that we're using with clients as a part of an engagement or a deliverable? And from there, from what we're currently doing and the resources we have, what are some next step service opportunities? Ultimately, you have to connect the dots from the client scenario to the client value. And the following slide is going to list 34 different ways that clients measure value. But at the end of the day, what you want to have is a list of, or essentially a cross-serving map, things to look for, resources you have to support those clients, that group of clients, how you use those resources, and who in the firm maybe has specific expertise. What are some additional or related services that you would look to branch into or expand into, and what is valuable within those service offerings to that group of clients. And again, here, 34 sources of client value. The big thing, again, the big takeaway from today's session is better mining and analyzing and understanding the tremendous amount of data that you have at your disposal, at your fingertips, and growing and expanding through a more refined, more purposeful approach. In order for your growth as a firm to be sustainable, it has to be targeted and purposeful. Okay, and looking here, one other thing I wanted to mention, on average, I see firms typically investing somewhere between 1.5 and 4% of net revenue on business development efforts. Again, thinking specifically about what it is that you're willing to invest to expand your reach within your client base, and at what point you're looking to measure a return. As you come up with a list of clients, we're certainly, through ProfitCents Professional Services, more than happy to sit down and dialogue with you about related service offerings that you could expand into and help you assess how ready and how able your firm is to enter those related areas. Okay. At this point, I'm going to go ahead and turn things back over to Jessica, who I know has another poll question and a few other things that she wants to discuss.
Great. Thank you, Lauren. That was a great webinar. We really appreciate your time. Before we open it up for questions, I do have one final poll question that I would like to ask everybody. Let me go ahead and get this up and share it for you. And that last poll question is, are you interested in learning how ProfitCents can help you cross-sell accounting services to your existing client base? I'm going to go ahead and give everybody here just a moment to answer. All right, the responses are still coming in, so I'll give it just a few more seconds. Okay. Looks like we have just all the answers here, so I'm going to go ahead and close that out. All right. So, Lauren, if you wouldn't mind turning it over to the resources slide. Okay, great. So on the resources slide here, you're going to be able to have Lauren's contact information. So if you do have any questions for Lauren, please feel free to reach out to her. We also have a link to our most recent white paper that is on cross-selling accounting services and how to identify opportunities to do so. You will also find a link that I encourage each of you to join for our business advisory group on LinkedIn. We have a lot of members in there that share best practices, ask questions, and just a lot of different great feedback and best practices for each of you. And the last thing on there is going to be a link to access our free industry data. So in August, we have opened up a small part of our database to provide industry data to all U.S. accounting firms, so you are able to access it there. And last is just going to be some questions here. Let me pull these up for you, Lauren. I had one user ask a question, what is a KPI?
A KPI is a key performance indicator. And basically, a key performance indicator is a ratio or metric that provides some sort of very targeted information relevant to a specific initiative or area of focus. So it is something that would be directly related to providing insights around a decision that you're looking to make, an initiative that you're looking to evaluate, et cetera. But a KPI is a key performance indicator.
Great, thank you. Another question in regards to one of your slides. It says the 1.5 to 4% of revenue for BD budget. Does that include marketing as well?
The actual definition for that does include marketing and business development, although I encourage firms to separate out the two when they're looking at investments that they're willing to make as well as measuring return. And that's a very good question. Yes, the 1.5 to 4% does include marketing and business development.
Okay, great. And then one last question here says, what service specializations have seen the greatest growth over the last several years?
That's also a good question. So in terms of service specializations that have seen the greatest growth, some of that will be respective to size firm or kind of scale of firms. But we're seeing international considerations, cash flow forecasting, state and local taxes or SALT, import-export considerations, I'd say certainly Sarbanes-Oxley, IT considerations, let's see, outsourced CFO services, we're seeing a tremendous amount of growth, IFRS consideration or consulting, as well as business recovery, forensics, and I'd say litigation support.
All right. Thank you very much, Lauren. It looks like that is all the questions we have today. So again, I just want to thank everybody for joining and for Lauren for presenting today. You will be receiving an email shortly from me that will include a recording of today's webinar for you to refer back to or to also share it with anybody within your firm. If we didn't get any of your questions answered, please expect a follow-up from us. And then for those of you that answered yes to learning more about ProfitCents and how we can help you with cross-selling services to your existing client base, we will be reaching out to you soon as well. Thanks again for joining, and please enjoy the rest of your day, everybody.